Welcome back, everyone. We have an exciting episode to get into. First of all, we have a report from the Wall Street Journal that Elon Musk may have a drug issue. It goes over all the drugs he's taking and why it's concerning some of the board members of Tesla. So we're going to be going over this entire report, which it's a pretty extensive one. The Wall Street Journal really goes through this, and I think it's good to go through these and determine whether or not this is a hit piece, whether it's just there to attack Elon Musk. We've seen that done many times before. Many times from the Wall Street Journal as well. So is it another hit piece on him, or is it something that Tesla investors should be concerned about? And then we also have some big news coming from Apple. They've announced that they're launching the Vision Pro headset. This is the $3,500 headset. Pre-orders start January 19th. It's launching February 2nd, so it's right around the corner within a month. This thing's coming out soon. We're going to be going over what this means for Apple, what it means for their financials, and how I see the Vision Pro fitting in with Apple overall. And then finally, we have some bad news for streaming services. If you're invested in Netflix, Disney, or Warner Brothers Discovery, there's a report from the Wall Street Journal saying that people are complaining that it's becoming more like cable TV. And they have some charts here sharing the cancellation rates that are rising right now. So we'll be going through this data, and as a large Netflix shareholder, I'll be determining whether or not this is really problematic for Netflix and other shareholders. So we have a lot to get to in this episode, and if you like this content, make sure you subscribe to the channel and hit the little bell notification so you get updates. Now I want to jump into the headline story here, which is they have this image of Elon Musk. On the front page of the Wall Street Journal, there's a report saying that he's using illegal drugs, which is concerning some of the leaders at Tesla and SpaceX. So obviously, if someone's using drugs, even illegal ones on their own time, I don't really care about that. That's not really public concern at all. The reason that this is concerning or potentially concerning to some people is because Elon Musk is the leader of these huge companies, the leader of Tesla, SpaceX, and Twitter or X. So there's three huge companies that he's leading. Now, they start off by noting Elon Musk's behavior, which obviously is much different than most other people, including most other CEOs of large corporations. They say that there's several explanations for his contrarian views, unfiltered speech, and provocative antics. We've seen those on display. I've showed many of them on the channel before. They've been highlighted all over everywhere, all over the media. Now, a lot of people like this type of behavior. Some people don't. But there's different explanations for it. They say they're an expression of his creativity, or the result of mental health challenges, or fallout from stress or sleep deprivation. That has been the explanation given for a lot of the history. But there's others saying, no, if you know Elon Musk, there's another reason that he's acting this way. It's not sleep deprivation or stress. In recent years, some executives and board members at his companies and others close to the billionaire have developed a persistent concern that there is another component driving his behavior: his use of drugs. The world's wealthiest person has used LSD, cocaine, ecstasy, psychedelic mushrooms, often at private parties around the world, where attendees sign non-disclosure agreements or give up their phones to enter, according to people who have witnessed the drug use and others with knowledge. Now, right off the bat, to me, that seems like a lot. I watched the Joe Rogan podcast like everyone else, where Elon Musk smoked marijuana in their studio. And it's like, okay, who really cares about that? A lot of people thought that was funny. But these type of drugs, LSD, cocaine, ecstasy, psychedelic mushrooms, this is a lot more than I was expecting to see here. I realized Elon Musk is probably open to it, but seeing that he's routinely using this many different drugs may actually be a bit concerning. In 2018, for example, he took multiple tabs of acid at a party he hosted in Los Angeles. The next year, he partied on magic mushrooms at the event in Mexico. In 2021, he took ketamine recreationally with his brother. People close to Musk, who is now 52, said his drug use is ongoing, especially in consumption of ketamine, and that they are concerned that it could have a health crisis. Even if it doesn't, it could damage his businesses. So it appears he's taking drugs on a frequent basis, and the one that they're the most concerned about is ketamine. Now, the Wall Street Journal goes into the legal implications of illegal drug use with running publicly traded companies, and they highlight this as a potential issue, saying illegal drug use would likely be in violation of federal policy that could jeopardize SpaceX's billions of dollars in government contracts. But this is a potential issue. If he was to be on one of these drugs and then he has one of the drug tests for SpaceX, that could cause a problem with his government contracts. So far, what we've seen are things that are mostly public nature, like Elon Musk acting out in public or saying things on Twitter, saying some crazy things in interviews. But now they move on to more private matters that have been behind the scenes. These are things that the Wall Street Journal is bringing up. One former Tesla director, Linda Johnson Rice, grew so frustrated with Musk's volatile behavior and her concerns about his drug consumption that she didn't stand for re-election to the electric car company's board in 2019, according to people familiar with the matter. People are saying that she basically stepped down because she couldn't stand how many drugs Elon Musk was taking and how he was acting as a result. An attorney for Musk said that he is regularly and randomly drug tested at SpaceX and has never failed a test. He also mentions that there are false facts in this article, but he didn't detail them out. Now, they go on giving more anecdotes about how the drug use is potentially impacting Elon Musk's ability to lead these companies. One example they give is at SpaceX, there was a rocket launch. Hundreds of employees gathered around waiting for Elon Musk to arrive. He was nearly an hour late. They say when he finally took stage, Musk was strangely incomprehensible at times. He slurred his words and rambled for around 15 minutes, according to the executives in attendance, and referred repeatedly to SpaceX's Big Falcon rock prototype, which is known as BFR, as the big effing rocket. That seems like Elon Musk. Now, they say it couldn't be learned if Musk was under the influence that day, but after the meeting, the SpaceX executives privately met about their shared concern of Elon Musk's potential drug use. And one of them described the event as nonsensical, unhinged, and cringeworthy. And again, obviously these are anecdotes, but these aren't from random people. These are the executives at SpaceX meeting together with this shared concern. I think that the public, or at least Tesla investors, are probably not going to care too much about this. Elon Musk acts the way that he does, and most people like him for that. That's the reason they're invested in the company. They like Tesla, they like Elon Musk, they like the way that he's running the company. So as long as he's doing similar things that he's done over the past 5 years, Tesla's probably going to be okay. I think the real risk here is a health crisis. If Elon Musk was hospitalized because of drug use, that would probably be bad news for Tesla. But overall, I don't think people are too concerned about this. It's going to take a lot more than a few anecdotes and a report from the Wall Street Journal to impact Elon Musk or his stocks. It'll take a major health crisis or something very dramatic. As of right now, I think that most investors are not surprised about this. They're not really concerned about it. Now, moving on, we finally have an announcement of the release of the Vision Pro headset. It's coming very soon. This is the super expensive VR headset that Apple announced. A lot of people scoffed at the price, but we're going to look at some of the projections here. Pre-ordering will begin at 5 p.m. Pacific time on the 19th. So you can pre-order your Vision Pro headset on the 19th of this month. The $3,500, that is $3,500 for this headset. That is incredible. Is Apple's answer to Meta's Quest headset. Yeah, the Meta headset is $500, $600 if you get the additional storage upgrade. So you're competing with a product that's $600 and yours is $3,500. I don't believe these two products are really competing. I really don't. I think they're in completely different categories going for different customers. So this narrative that they're trying to create of Apple going after Meta is true in a way, but not with this headset. The real competition here is for developers. That is what Apple's trying to win over. See, when developers go onto a platform and they create apps on it, that app store becomes very powerful, very dominant. It's a platform effect. That's where the network effects kick in. That's why Salesforce is such a good investment. They have a huge app store with so many companies building on their platform. You have Apple with the obvious app store. That's a huge moneymaker for Apple. It's the network effect. It's why other companies can't start a phone company because they can't get developers to build on their platform. It's why the Fire Phone failed, why many others failed to defeat Apple. The big thing these companies need, each of them desperately, are developers on their platform building apps for them. That's where the huge network effects kick in. Apple already has an inherent advantage because developers that have built on the iOS, developers that have built on the iPhone, they become extraordinarily wealthy doing so. It's hugely successful. That's where all the money is going, is on the Apple App Store. So they're going to be a little bit biased towards building on Apple, any new future device they have. If Apple's able to take the lead in developers on their headset, that will be the head-to-head battle. Not how many devices are sold, not how much revenue. It's who gets the most developers building on their platform the best apps. The developers on these platforms will be the big thing that determines the winner here. So Apple's going to work very hard to win over the trust and confidence of developers by having developer conferences where they can show off the device. And one of the steps that they've chosen is to make the best device in the category, the most impressive one to developers, the ones where developers feel like they'll be able to build the best apps for. So I think that all of this strategy, everything initially, all of this is centered around winning over the developers to their platform. If they can do that for the headset, that will be Apple taking the victory. It's not going to be how many sales they get, how much revenue they make selling the hardware. All of that is important, but it's secondary to having developer support. Now, in terms of how much money this is actually going to make Apple, at least in the short term, the first year, UBS has an estimate of $1.4 billion, which they say is relatively immaterial. If we look at Apple on Qualtrim here, we can see how this would impact the stock. We look at Apple's revenue. We can zoom in over the past 10 years. In 2023, it was $383 billion. So if we estimate another $1.5 billion, that really doesn't impact the stock at all. Now, way down the road, 5 to 10 years, this could have a meaningful impact on Apple's revenue, but in the short term, it's not going to have any. Now, moving on, we have a report that seems gloomy for streaming services. We're going to be going over this one because it says that more Americans are canceling their streaming services. We know the complaints. There's so many streaming services that now it feels like cable TV. A lot of people feel like it's too expensive and they're cutting back on their streaming options. Now, I have to mention beforehand that I am invested in both. I should have mentioned it for Apple. I'm invested in Apple, been invested in that company for a long period of time, but I'm also invested in Netflix. So Netflix is a company that I have a very bullish stance on. I just feel good about this one. I feel like it's going to be a much bigger company in 10 years. The world's a very large place. There's lots of people that want entertainment. For me, Netflix is one of the few streamers, in fact, the only one that's a standalone streaming company that has become largely profitable. If you look at the company, they have enormous free cash flow in 2023. 2022, it was $1.62 billion. In 2023, it's going to be over $6 billion. The past 3 quarters alone have all been over $1 billion per quarter. $2 billion, 1.34, 1.89. They're expected to come in somewhere around $6.5 billion in free cash flow. And that's not diluted free cash flow. They don't have much stock-based comp. So that's real cash return to the shareholders. Even without the writer strike and actor strike, this company is highly profitable. So Netflix is a company that I like because it has enormous growth potential across planet Earth with many people that love entertainment, and it's a very profitable company. But here I am reading reports that people are fed up with their streaming services and they're canceling in increased numbers. Now, the article starts off by saying that it's getting a lot harder for streaming services to hold on to their customers. Crystal Rivas, a mother of 6 in Lynn Haven, Florida, recently canceled her subscriptions to Disney Plus, Paramount Plus, among others, because of their swelling price tags. She's also considering canceling Netflix. So she's cutting back on the streaming budget because of the rising cost of living and the increased price tags on these streaming services. This was really bound to happen at some point. When the streaming services first launched, like Disney Plus a couple years ago, I think in 2019, it was so cheap. It was $6 a month. They had some great shows like The Mandalorian to start it off. I thought that was a huge success, but that was not sustainable. Those prices were being subsidized by the investors, and the investors are now saying, we don't want to subsidize the prices anymore. So these streaming services like Disney, Paramount, HBO are all having to raise their prices dramatically. Disney Plus has gone up like over double since then. And the content offering really hasn't improved that much. So the price is much higher. The content is about the same. A lot of consumers see this as less of a great deal than it once was. Now, they share a chart here of the monthly churn for streaming services. This is the percentage of people that are canceling every single month with all the streaming services combined. It goes from 4% to around 5%, a little bit above 5%, a little bit below 5%. Then it goes all the way up to 6%, 6.3%, and it spiked up during the holidays. So this is a little bit odd. I would expect more people to subscribe to services during the holidays. Seems like a time that you have more time off, you're around the house more, you're watching TV, sitting back, but we see the opposite here. Lots of people are maybe looking at how much they're spending on on the holidays and traveling, and they're wanting to cut back on their budget. So they're doing their New Year's resolution, they're cutting back on streaming services. We see a big spike in October and November. Now, another data point they share is the amount of people that have canceled 3 or more subscriptions in the prior 2 years. So in the past 2 years, did you cancel 3 streaming services? This went from below 10% in 2021 all the way up to now 24% in November of 2023. So this is going up dramatically. A lot of people are now switching off, they're churning, they're canceling, they're changing their plans. Now, some of these people do return back to the streaming service. They don't leave it forever. They just cancel for a while, wait for it to come out with new shows, and then they resubscribe. This happens frequently. In fact, the number of people that resubscribe within 11 months is 39%. Now, if you drag that out to the past 2 years, it's probably up to around 50%. So a lot of people resubscribe to streaming services that they left within a single year. Now, I've said this many times, but I think there's going to be winners and losers in the streaming industry. Some of these companies are really going to struggle with defecting subscribers that come to different platforms. And I believe, like I've said many times, that Netflix has already won. In their last quarter, they gained 9 million subscribers. So this gloomy article from the Wall Street Journal suggesting that all of these companies are losing subscribers, that everybody's fleeing these companies. They gained 9 million subscribers in a single quarter while generating more free cash flow than ever. So Netflix has literally never been in a better situation. And with the pressure on all the other streaming services to generate cash, they're going to be licensing more and more content to Netflix. So I have no plans on selling my Netflix over this news. For me, a couple months of increased churn is not a concerning trend, especially for Netflix's situation. That's all for this episode. Hope you enjoyed. See you in the next one.